Is it really just the data this morning, the stickiness, the lack of deceleration that makes you and your great team over there think that maybe it's more 100 versus 75?
So I think you have to frame it relative to where we were. And looking at the inflation data from last month, which gave some credibility to the idea of the right tail outcome, right, that there was a potential for a soft landing, as you finally saw that inflation rollover, certainly from a month-over-month perspective. The shock of today's upside beat and the magnitude there effectively removes that right tail scenario, kills the soft landing dead. And in this case now, it almost increases with certainty the idea of a hard landing. And that's exactly what you've seen with implied rates pricing. Fed terminal rate is up, implied 35 bips today. So we've added a hike and a half in very short order before kind of March, April of next year. And ultimately, that just means you're going to slam the brakes on the economy and increase the risk of an accident.
As the market, though, priced in, not necessarily whether we're talking 75 or 100 here, Charlie, but really priced in the idea that the Fed, that we were going to end up in a hard landing given the Fed's actions?
Yes, I think there's certainly an acknowledgement now, even from kind of those most bullish folks, that when you see this inflation staying sticky, when you see it remaining very broad-based, we knew services was going to stay higher. Certainly the rents impact is critical there. But when you see, and that's from the core perspective, but when you see core goods reaccelerate, what it's doing now is that it's kind of making people realize that the Fed's worst case scenario, that wage price spiral, that potential for embedded higher inflation and unanchored inflation expectations, all of that has picked up delta. All of that is a very real threat now. And when you look at that in conjunction with the labor market as hot as it is, and with wage growth at all-time highs, the Fed has no alternative but to, as I said, pump the brakes, tighten financial conditions, ratchet real yields higher, and that's just going to crunch on risky assets.